Hello, and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Trends in Environmental, Social, and Governance Programs. This is the third session in our virtual 2021 Building Opportunity Conference. And over the span of this conference, we'll cover topics including real estate industry outlooks and how technology and innovation are affecting the built world. More information on our conference and sessions are available in the links provided in your console, as well as on mossadams.com. And before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I'd like to turn the floor over to Elaine Irvin, a National Practice Leader of the Construction, Real Estate, Hospitality, and Professional Services Group here at Moss Adams. Elaine?
Thank you, Amy. Hello, and welcome to today's session. I have the pleasure of introducing today's moderator, Justin Neff. Justin has practiced public accounting since 2005 and specializes in providing audit and insurance services to companies primarily in the middle market. Justin also has over a decade of experience of providing assurance services over environmental, social, and governance reporting, and serves as our leader of the firm's ESG assurance practice. And with that, I'd love to welcome Justin to lead today's panel. Take it away, Justin.
Great, thanks, Elaine. I'm really excited for today's panel. I think as a firm, we've gotten more questions on this topic for the past 6 months than we have in the previous 10 years. With the demand for transparency from company stakeholders, including investors, customers, lenders, and employees, along with the potential for increased climate change disclosures coming from the SEC and potentially trickling down to private companies. Companies are taking a hard look at their policies and initiatives. And for some companies, this means, expanding their programs or looking to report. And for some companies, this means starting from scratch and just looking at how do I develop a program, when we haven't previously had this in place. So I think today we have a great mix of panelists who can speak to their experiences from different roles and perspectives in the world of ESG and answer some of those questions. So I'd like to start with a brief introduction from each of our panelists. First, we have Erick Garcia, Chief Financial Officer of Morley Builders. Erick, can you please share a little bit about your role and experience with ESG programs?
Yes, good morning, everybody. So I am the Chief Financial Officer of Morley Builders. We are an employee-owned company that operates here in Southern California. We do commercial construction and multifamily residential. Our journey into understanding and implementing ESG was sparked by this notion of the promise of value creation. And we have been looking at the different initiatives and practices within ESG and integrating them into our overall business strategy, again, to hopefully create and enhance value for all of our stakeholders, including our employee owners.
Thanks, Erick. Next, we have Tara McCann, Senior Managing Director and Head of Capital and Client Strategies with Rockwood Capital. Tara, can you please give a little bit of background on your history with ESG?
Sure. So, hi, everyone. Thanks for joining us today. So I also chair, in addition to being where I chair our ESG committee. And so fortunately for us, we're a private real estate investment manager, been in existence for about 30 years now. And I'd say the role of real estate in the health of our urban environment. So very much focus on the environment is very much part of the foundation of our strategy. So what we've been focused on the last couple of years is formalizing all of those policies and procedures and those things that were very much foundational to our strategy, and making sure that we're gathering all the data that we need, that it's uniform across all vehicles, that we have a 3-year rolling roadmap and things like that. But the role of, I'd say the E of ESG is very much what's foundational to our strategy. So nature of value and the role that that plays in real estate. And, we're big believers in, when you create something like that, it enhances the value of the asset. And so, for us, it's, as I said, foundational.
Great, thanks, Tara. Next, we have Jameson Morrell, who's the global technology leader of resilience and sustainability with Jacobs Engineering Group. Now, Jameson, I know you wear a lot of hats within your organization. Could you please share a little bit with the audience about your role in ESG?
Yeah, thank you, Justin, and also thank you, Elaine and Amy, for inviting me on this panel, and Moss Adams. This is great. I'm really enjoying this already. I'm Jameson Morrell. As you said, I'm a global technology leader within Jacobs. Jacobs is a full-service professional technology and engineering service firm. We basically touch pretty much the entire life cycle of the built environment in most market sectors. And so I wear 3 hats really as a technology leader. The first is I advise our clients, and also internally I advise Jacob teams that service those markets and service that life cycle on ESG. What is it? What's material to what they're working on? And then how can they incorporate that into the life cycle of the built environment? I also work internally at Jacobs on what we call the ESG market intelligence team. You'll hear me talk later about, I use the term that the ESG fingerprint is unique. So we've trained up ESG analysts and ESG advisors, because I don't scale well, to be able to evaluate and understand, hey, what are the ESG priorities of our clients, so that we can make sure that we account for those in our services and solutions. And then also I advise our Center of Excellence, and that would be the equivalent of the corporate sustainability team. So we are integrated as a team. So our corporate sustainability team is very much focused on the sustainability and resilience of Jacobs. So what is material to Jacobs from an ESG standpoint, making sure that our performance and our outcomes match that, and that we can report those out to our stakeholders. But material to Jacobs are the approximately 3,000 projects we deliver annually, and all of those have this sort of unique ESG fingerprint. And so our materiality, what's substantive as far as ESG is a bit of a moving target as the marketplaces expand and better define these things. So that's a very complicated introduction. So thanks for sticking with me.
Thanks, Jameson. No, that's great. A lot of unique perspective you've got there. So look forward to chatting with you a bit more on that as we get started here. Finally, we've got Morgan Dipo, who's a Senior Vice President with Bank of America. And Morgan's here to share his thoughts and insights on ESG from a lender perspective. So a little bit of a different perspective than the rest of the panelists. So Morgan, can you share a little bit of background on your role in ESG?
Yeah, hi everyone. Thanks for having me, Justin. I'm Morgan Dipo. I'm a Senior Vice President on Bank of America's Global Commercial Banking team based here in Seattle. I've been in commercial banking since 2007. And amongst other things, I help lead our efforts in business development, digital, and evangelizing ESG for our market, which has been a big deal for a lot of our clients for a long time, but as Justin kind of alluded to, becoming more and more of a focus as companies are trying to do more of the right things, both for society and for the bottom line. And so, our role there has been to help. There's actually some ESG related banking products, largely focused on the debt side, but all across the balance sheet as well, helping to connect people. And I think a lot of what Moss Adams does in this space as well is just helping to have our clients see what other clients are doing in this space and how they can be best in class performers as it relates to ESG. So I'm grateful to be here.
Great, thanks, Morgan. So with that, I think before we start our questions here, we're going to do a couple polling questions. Amy, could you please pull up the first polling question here?
Yeah.
The question here is just related to representation. So, what industry do you represent? And Amy, I don't know if you want to fill in a little bit about this.
Yeah, let me pull it back up here. So we're just trying to get a feel for the audience. And so to respond, you will want to click the button next to the answer you choose and then hit submit. And if you cannot see the submit button, you'll need to enlarge the slide area to see that. And then also as a reminder, if you want to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions that we pull up throughout the webcast. And it looks like most people have had a chance to respond. So, Justin, here are the results.
Okay, so we've got pretty good representation across the board here. We've got about a fifth in construction, about a fifth in real estate, to a quarter, some engineering, architecture, hospitality, and 50% are others. So good representation across the board and representing a lot of different segments of the industry. And let's see, we'll do one more polling question here.
All right, so this polling question is, how invested is your company to ESG programs and initiatives? And it goes from very invested all the way down to I'm not sure. And so go ahead and select the answer you choose and hit submit. And I also want to remind the audience that if you have questions for our panel, you can submit those using the Q&A window, and we will do our best to try and incorporate those throughout our discussion. Leave this up here another 5 seconds or so. Okay, here are the results.
All right, so we've got a good mix on very invested at about 10%, working on it for 22%, still planning 22%, and I'm not sure. Okay, that's really good. I think that helps us kind of gauge, where you all are in the process of ESG and your familiarity with it. So, with that, I think we can jump right in here with the discussion. I think, my first question is for you, Erick. So what does ESG and sustainability mean to you, and how has it factored into Morley's business strategy over the years?
Yeah, so thanks for the question. I think being an employee-owned company, we have been working on sustainability for a very long time in a slightly different dimension. So when we first heard about ESG a couple of years ago, we really thought that this was something that didn't apply to middle market construction companies, that this was something that applied to much bigger companies. But taking a deeper dive and trying to understand the different promises, we found this depiction from SASB, which is a sustainability board that many of you have probably heard. we found this very helpful because it helped us begin to frame what this means and the applicability of these initiatives and these practices for us. So, quite possibly the E within ESG that applies to the environment is the one that is receiving a lot of attention, probably the biggest share of the attention, either from a regulatory framework or from the investment community. But for us, I think that what we felt that in order to move the needle with regards to the environment, it's going to require an industry-wide effort. Whereas if we focused on the S and the G, that those were things or practices where we could take and put on initiatives where we could actually move the needle. So for us, I can talk a little bit more later about our environmental initiatives. We have focused a great deal of our effort in human capital, in social capital, in terms of community relations, business innovation, and governance. So if you can bring up the next slide. And let me see. Yep. And as I alluded to earlier, what really got us really excited about this is the overlap between our overall business strategy as it pertains to sustained business growth and the different initiatives that companies like ourselves can take in each of the dimensions of ESG. So if we look at E, obviously there's big drive for greenhouse emissions and neutrality, but this also has a lot of applicability to our efforts and our initiatives in attracting new customers or more customers. The S, as I mentioned earlier, in helping us attract talent in an industry where talent is hard to come by. And from a G standpoint, is becoming just better citizens. And for an employee-owned company, it's also consistent with developing a governance structure that will support employee ownership.
Thanks, Eric. Yeah, great comments. I mean, I think, your comment over the years basically thinking that it didn't apply and it only applied to larger companies. I mean, I think that's what a lot of companies have thought over the years. And especially looking at sustainability, I know the concept of that has been around for a while. But the S and the G, these are relatively new areas of focus for companies, especially in the middle market, I think, and going forward, I think will continue to be that. So, thanks for those comments there. Next question for Jameson, kind of along the same lines. Can you describe the evolution of Jacobs ESG programs and let us know what's next for your company in the space?
Yeah, thanks, Justin. Let's see, the evolution of our ESG program, it's really been a convergence of three paths. The first path is our what we call our technology-enabled expertise. So within Jacobs, we have technologists like myself, and our career path is to be experts in something. So air, land, water, energy, materials, data, design frameworks, regulations, capital, supply chains, ecosystems, delivery techniques, etc. There's experts in those space, and I just happen to be assigned the resilience and sustainability, and so I've been working on ESG. I looked up, actually, the first time that pops up in my data directory is sort of September 16th, 2015, which is interesting. So been talking about this for a while. So there's about five global technology leaders that are my peers, and we're spread out across different regions, and we talk all the time. And so that's sort of one aspect of, what does ESG mean to these technology expertise? So if you look at the slide that Eric provided, the E, the S, and the G, everything under there are expertise that you need in order to operate. Actually, if you go back one more slide there, I see the presentation. There you go. So those areas under there within Jacobs, we have technologists that are experts in those areas, but just working with them to understand that they actually come together to form sort of that cross-functional view of ESG. So that's one sort of path. The second is our global market capability. And so right now, this is on an ESG aspect is being head up by one of our SVPs, Jan Wallstrom. And so on that global market capability, that's really how do we deliver that built environment lifecycle. So from the finance and planning to design to construct and sort of commission stage into the operations and maintenance, or sort of the life cycle of those assets. Or excuse me, the lifespan, I guess I would say, of that asset, right? Talking about the bigger life cycle here, and in there you've got a sort of a smaller sort of retrofit reuse a circle as well, where you get into that design and build sort of circle, and then you get to asset end of life, so remediation, restoration, reuse, whatever that might be, bringing that back to complete restoration back to an ecosystem, or bringing that back to a brownfield or something that can be reused. And so that global market capability has to be applied across, water, transportation, advanced facilities, chemical, industrial, all the different markets that we use. So we have expertise there who understand what does ESG mean to the capital that's deployed into these capital projects in these different market sectors. And so that's the second sort of stream. The third is I mentioned this earlier, our Sustainability Center of Excellence. So what does sustainability mean to Jacobs? How do we manage our sustainability and resilience? How do we break that into what is material from an ESG standpoint to Jacobs? And so that team has put out what we call our Plan Beyond strategy, which really focused on our people and our places, and then also our partnerships. So we can be sustainable and resilient with our people, and then also with the places where we operate. But then the partnership really gets into the relationship we have with our clients, because everything that we do in that built environment lifecycle enhances the performance of our clients' ESG performance. And so we have to understand each one of those sort of unique fingerprints, which is what brings us together. So as far as where the company is going next, it's actually just happened. We've just put out this week what's called the Office of Global Climate Response and ESG. It's headed up by our president and COO, Bob Pragada, and all three of those paths that I just mentioned are converging under there. And so there's going to be a connecting point and an integrated approach to this. And I'm really excited about that. And it's really just sort of accelerated even from that ESG market intelligence that I was telling you about. I just love how it's such a dynamic space. Sustainability is different from a sector level to a company, to a division, to a product line, to a site, to each capital project has its own unique ESG fingerprint. And so I'm just loving how this is all coming together.
Oh, great. Thanks, Jameson. I really like the concept of that Plan Beyond strategy. That's really cool. And I know you guys are doing a lot of great stuff in this space. So thanks for those comments. Next question is for Tara. On your website, it states Rockwood has spent the past year refining its ESG strategy and identifying areas for growth. What's that process look like for you as your strategy has shifted?
Sure. So the underlying strategy, as I said before, has stayed the same. So we focus on the role that real estate plays in the health of our urban environments. But one thing we have focused on, we've been working with a number of consultants, is refining our policy. And so we have our policy. It's funny because we just the speaker just before, we focus on people, place, and performance. So people, how do we treat the people that we interact with within Rockwood, our partners, who do we partner with? Are they the people that share our values? And so that aspect is on the corporate side and on the asset side. And then place, what role our real estate has in the communities where we invest. So we invest just in 12 markets. And so we're really focused on the role that our real estate plays in those communities. And then, what ways we can support the communities as well. So a lot of our philanthropy efforts and things that are focused on the communities where we invest. And then performance, like holding ourselves accountable. We've set goals. And so a lot of what we've spent the last 2 years around is, formalizing. So we have ESG matrices for all of our investments when the investments are made. For asset management, we've integrated ESG factors into all of our policies and procedures, all of our legal documents, our agreements with our partners, et cetera. And so that performance part is holding ourselves accountable to goals that we set and to, internally and externally. So we produce an ESG annual report where we outline for everyone what our goals are and what we're looking at. And so our investors can hold us accountable and track with us. So that's one of the things that we've spent a lot of time on in the last few years.
That's great. Yeah, thank you for that. A little bit different perspective on the investment side. And then, another perspective yet, Morgan, shifting gears to a lender perspective. Have you seen additional focus on ESG recently with your customers? And I guess another part of that question is, for those who have increased their focus on ESG programs and initiatives, how has that impacted their financial performance and operations from what you've seen?
Yeah, thanks, Justin. ESG has been a huge and continually growing focus for our customers. And I like what Tara mentioned, her company realizing that they have a role to play in real estate. I think we too have realized that as a bank and a provider of capital, we have a role to play in society to help drive ESG forward. And we've seen this evolve over time. So historically, management teams were incentivized to focus on the near-term bottom line because theoretically that's what the shareholders want, or that would benefit. Then, certain customers started speaking up like, hey, I might not buy your product if I don't believe you're doing the right things as it relates to ESG topics. Certain employees might start speaking up within a company. Obviously, the community at large. And then ultimately, shareholders, thankfully, started to raise their voice as well, to now where we're at, where companies are now at the point where they need to focus on what we call stakeholder capitalism. That's seeking to drive society forward by focusing on what's best for all four of those groups: employees, customers, the communities we serve in, and then somewhat paradoxically, that focus benefits shareholders as well. And then to the point of performance, that's just it, is that ESG is not just about doing the right thing, it also leads to better performance as a company. And we at Bank of America even have research to back that up. So we've shown that top ESG ranked companies record better stock performance than your average S&P 500 company. There's rising investor interest and demand for ESG tied investing. And then high performing ESG companies, they tend to have better brand reputation. They have happier and more engaged employees, and their customers trust them more. ESG controversies will cost a lot in terms of PR nightmares, legal costs, and stock prices will tank as a result. So, as Erick kind of alluded to, it's not just big companies anymore. This has trickled down to the middle market and smaller companies as well. Because ESG is not just about doing the right thing for society, it's also the best thing for a company's performance. We've seen that the decisions can be tough, but they ultimately make great business sense too, we believe.
Great, thanks, Morgan. Yeah, and it is very interesting to see, some of these statistics that are coming out that, where a lot of companies in the past have thought, okay, this is maybe the right thing to do, but is it going to cost us more money, or are we going to get into a tough situation there? And I think what we're seeing is that, it's the opposite, right? I mean, I think companies' stocks are better performing when they're focusing on ESG, policies and initiatives, and they're seeing a lot of kind of intangible benefits that hadn't been contemplated previously. So, I mean, I guess we're seeing that this is obviously, very important for all those companies who are out there, kind of on the fence about whether or not to, place a lot more focus on that. So, as we're looking at that, my next question is for Erick, in terms of what companies should be thinking about when they're looking to implement their ESG programs. And Erick, I'd like to hear from your perspective, what are some of the factors that Morley was considering when you first started looking at this?
Yeah. So as I mentioned earlier, we naturally started thinking of initiatives where we could have, as a middle market company, higher impact. And so we focused primarily on two. We said, okay, how do we leverage our business innovation in aligning our business strategy with ESG strategies and also human capital. So from a business innovation standpoint, we continue to partner with architects and our owners or clients in looking at different construction methodologies, specifically modular construction and mass timber. And so we spent a great deal of time researching and providing different constructability options for our clients as they begin to consider making a larger commitment within their ESG platform or portfolio of projects. So that's on the business innovation, and on the human capital side, this is not going to come as a surprise to anybody. We've put a lot of focus and attention into diversity, equity, and inclusion. It's a program that we started company-wide about a year ago. We started with education and educating everybody as to how to begin to view DEI in a broader context. And in support of that, we also started shifting our recruiting strategy to try to make sure that we were targeting schools and locations where we normally hadn't visited before, in order to begin to broaden the diversity pool of our employee owners.
That's great comments, and I think you said something that really resonated with me and what we've seen. I think ESG initiatives have become so important. When you're looking at hiring and generationally what people are looking for when they're looking at companies to go and potentially join. And I think the diversity and inclusion has had an increased focus in recent years, and I think that's just so important right now, and I appreciate those comments. Jameson, from an engineering construction company standpoint, I mean, what do companies need to be looking from your perspective when they're starting to ramp up their ESG efforts, and how can smaller firms, build out these programs that don't necessarily have dedicated resources, or a whole, folks who are in charge exclusively of ESG, in their role? It's kind of a night job, outside of their normal role.
Well, I think it transitions your question from what Erick said. Innovation is key. All the markets out there are under disruption to address, specifically, the hot topic right now is climate action. And so innovation's happening at an operational level, at a tactical level, and a strategic level. We're seeing completely new business models out there. And so from an engineering company's aspect, you have to be able to incorporate those into your the decisions of your clients and help them with that technical sort of decisions, and then into designs, and then even how to sort of pilot, bench test, if you will, and deploy those at scale. And those are an important thing to keep track of where the market's heading, what technologies are leading that, and how's that going to apply. And then, as Erick just said as well, none of this is going to happen if we don't crack inclusion and diversity. There's a skilled labor shortage out there. There's trillions of dollars coming into the built environment. The ESG and the social awakening that's happened over COVID is really pushing the E, the S, and the G, and the investors and the lenders, as you hear from Tara and Morgan on here, are demanding that. So the capital that's flowing in has earmarks on it that says, this will perform in an ESG manner. And so in order to deliver that means we have to have more skilled labor, the trades, as I affectionately refer to them as, which means the girls in school today, half of them have to believe and know and want to be in those technologist roles that I just mentioned, right? It means that we have to go out and make sure that we get into the historically excluded communities, into those colleges that don't normally reflect in the CVs of Jacobs, right, of our technologists and stuff. So how are we doing that, right? And so those factors are important. As you're ramping that up, though, the main thing to realize is that understand that each fingerprint is unique when it comes to ESG. And so you have to raise ESG competence with your employees that you currently have. You need to bring in those inclusive and diverse voices and folks in, and that also helps to raise your competence there. And then you got to know your client and the markets that you serve. What are the ESG priorities? How does that change when you go from the sector down to a capital project level? They are different, right? A water project in one part of the world can be very different than a water project in another part of the world, for example, right? And then you've got to be able to incorporate all that knowledge and all that capability into your sales cycle. So where are you pursuing work? What are the ESG priorities in that work? There's a lot of code switching going out there as well. There's a lot of confusion out there as far as different words that are being used. Is it sustainability? Is it resilience? Is it climate change? Is it decarbonization? What do people mean? You need to be able to unpack that in your sales cycle. Make sure that it's actively reflecting what your client is speaking to you in your proposal and the language that they use. And then it has to translate into your project delivery. That's a breakdown point right now. It may get sold, but is it actually built into the final solution? You get into the pressures of being on time, on budget, meeting a certain quality, and you need capacity online. Sometimes these ESG priorities start to get stripped out in that process. And so there needs to be some accountability there. I think the lenders and the investors are starting to figure that out as well, right? We're giving you this capital, but then we actually want to see that the performance is there as well. So I think those are a lot of things that sort of to keep into mind. As far as smaller firms are concerned, really, go through that ESG assessment process, right? Benchmark and baseline both your own performance against peers and what your lenders and investors, or from a private equity standpoint, is demanding. And put together an evergreen program. And so this gets into that management system that continually improves itself annually, tied to your budget cycle. So just get started, right? So plan it, hit those things that are material, mobilize a program, assign responsibility, assign budget, get that implemented and up and running. And then as part of your annual budget processing, improve it. Sustain it, refresh it annually, because what are the priorities are going to change. And that's the best way to get started if you haven't yet.
Great, thanks, Jameson. Yeah, great comment. And just getting started, right? It can sound daunting, but doing anything really, and you don't manage something until you measure it, and so you start looking at what you can actually kind of quantify and measure, and start small and go from there, and expand the program. So great comments there. My next question, Tara. I mean, from an investor standpoint, when Rockwood's looking at making an investment, what ESG factors are you considering, and are there specific metrics you would be more interested in as an investor than others?
Sure. So we track, I think, the ones that you would typically think of around real estate. So energy usage, carbon footprint. So we track all of that. We have a technology partner that we work with where we track all of our utility data and that sort of thing. But we also work at developing our own KPIs and things that we find important to us, and sort of where we think real estate can enhance value and be a good addition to the community. So we look at things like walk score, access to public transportation, access to green space, job creation and diversity of those jobs. So we study that, integration into the broader community, the role that the real estate can have in the broader community. So we have a number of other factors in addition to your typical, I guess, energy usage. So the role, so looking at the social, what role it plays in the community, how it contributes to the governance and, of the community. So we have what we call a health of cities matrix. So in addition to our ESG matrix, we have that matrix where we look at all of the factors and the role that it plays in health of cities. So not just medical health, but economic and social, and different types of that sort of health. So those are some of the things that we look at. And we worked with our consultant. We have a consultant that we've been working with, and so how we track that data, how we record it, and so that we can share that, with our investors, because it's important. They care about that, and share that. I think one of the comments that Jameson made is really important. The great thing about now, so we've been, as I said, it's part of the foundation of our strategy. But the great thing about now is that our investors care so much more. And our employees care. So it's really They've been really engaged in thinking about how we can enhance and what should be in these matrices, what we should be tracking. And we're constantly, each year, we're looking back and thinking, okay, we look at the data and we think about, what should we be tracking? What goals should we have around that, those KPIs, et cetera. So it's a constant loop each year of thinking about what initiatives, what data, what information, and how, how across the life cycle of each investment, how we can enhance our role. So.
That's great. Yeah, thank you. And Morgan, to you, kind of same question. I mean, from a lender perspective, what ESG information do you find the most relevant when making lending decisions, and how does that information impact a borrower's access to funds, or are there favorable rates that companies are getting if they do have ESG programs or initiatives?
Yeah, as I mentioned earlier, we have data that shows that ESG ratings are one of the best signals of bottom line performance of a company. So top ESG ranked companies tend to have lower future earnings per share volatility, which we as lenders like to see. Less volatility is good for lenders. And to cite another study, we saw that 90% of S&P 500 companies, 90% of S&P 500 bankruptcies from 2005 to 2015 could have been avoided by investors if they had just screened out firms with below average ESG rankings 5 years earlier. That's important to us as lenders too, avoiding bankruptcies. And so do we look to ESG statistics when judging a company's creditworthiness? Absolutely. Good companies also enjoy lower funding costs as a result. And the higher the ESG score, the lower the cost of debt is demonstrated in the S&P 500. And I would tell you anecdotally, we see that in the middle market as well. And why is that? There's direct examples, things like green loans, sustainability bonds, social bonds, renewable energy finance. Those are direct examples that come with a lower cost of debt. But there's also a broader, more subjective benefit too that we pay attention to as it relates to more traditional bank loans. If a company can produce a rock solid sustainability annual report, they can actually point to KPIs that are important to them and their role that they play in the community. In fact, also worth pointing out is that we've even started offering customers sustainability linked pricing because those sorts of KPIs are one way for us to manage our risk. In other words, key performance indicators as it relates to ESG can also be an indicator to us of how risky a company is, and we can price according to that if a customer is doing better on ESG metrics. So what does all that mean? Companies that can demonstrate they are high performers as it relates to ESG can enjoy better pricing, better loan terms, and frankly, an overall better relationship with their bank is what we see.
Thanks, Morgan. That's great. Yeah, and I know I was chatting with some of your colleagues at the bank, and it was surprising to me a little bit to hear that there was favorable pricing, and I think that's great. I mean, it's one of those kind of tangible benefits you can point to, and I was really glad to hear that. So thanks for sharing that insight. My next question, we'll do one more question here, I think, and then we'll do a few more polling questions. But this is for the whole panel. What programs would you say your organization has put in place to increase inclusion and diversity? And have those efforts, if you had put them in, have they had an impact on your hiring techniques and employee retention? Because I know there are some benefits to that on a lot of different fronts. So I'd kind of open up to the panel if anyone wants to speak to that.
Maybe I'll start since I just got done talking. I'll say a big thing for us as a very large organization has been employee networks. So we have networks that have all sorts of different focuses. There's a Black professional group. There's Lead for Women. I'm actually part of the leadership committee for the Disability Advocacy Network because everyone has a story to tell. And we think these networks are a great way for employees to be more engaged, obviously with each other, people who have similar interests and identities, but also it helps grant them better access to management and across business lines, and that enables opportunity for career mobility and promotion. and that helps with employee engagement, making people feel better at work and want to perform better as a team and as a company.
That's great. Thanks, Morgan.
I would add, a couple of initiatives. One is in order to increase, the diversity of our workforce, we have partnered with the labor organizations that we are signatories with, as they have a broader reach, and in today's world, a very compelling, message to underserved communities of offering steady work at substantially higher wages for the communities that we operate in. So that's one initiative. I think some of the unions have been much more receptive than others in partnering up with those initiatives. And the other one, as was mentioned before, is recruiting in places where we hadn't recruited before. And we have been positively surprised and pleased with the results that we've had from pursuing these initiatives.
Great, thanks, Eric.
Adding to that, so here at Rockwood, so we're a little bit smaller company than and probably some of the others, but so a couple of things that we do internally, we've similar to what Eric's saying, we've been looking at increasing the schools and looking to different types of schools for recruiting purposes, partnering with organizations that we know can serve up diverse candidates and increase that pool. So we support a number of organizations. So on the recruiting side, and then on the giving and partnership side, organizations like SEO that sort of go back to, at the college level, and in some cases, some of these organizations even earlier. So working with organizations to increase the pool of candidates that are looking at these sort of jobs. So like Jameson was saying, you have to have enough candidates to like interview and to give jobs. So you need to go back and encourage them, at younger and younger ages to start exploring careers in real estate or careers in finance. So we support efforts WX for women. SEO focuses on diversity. She Builds is another organization, and Twigo Foundation and a number of others that work. As I said, most of them all are at that college level. Some even earlier, but looking at giving scholarships and internships and et cetera, giving them access and giving them education about all the things that are available. I think, so much people just aren't, you think about when you're young, you may not, if you haven't been exposed to it, you wouldn't even know all the, the breadth of jobs that are available in real estate. So they're great organizations. So I encourage anyone here, if they want to learn more about them, we're big proponents of this.
Yeah,
Thanks,
and at Jacobs, our board of directors and our executive leadership team got together with our employee networks. We have 8 of them, and they put together a global action plan for advancing justice and equality, and that dovetails into our existing global inclusion and diversity strategy, which is where those employee networks come out of. And what's really been an interesting twist on that is that they empowered those our employee networks to actually deliver that action plan, and so it's been very interesting to see that in action. We really started out with just sort of internally having the conversation and trying to understand, what does this mean, and what actions can you take, and when we ran right into COVID, and so I'm curious to see when we start to come back out and come back together of kind of effect that this has had. But a couple of things that I took away from that over this period of time while we've been apart is around looking around my teams and asking the question, hey, who's not at the table? Who's not here? Whose voices are we missing? And one I quickly identified is the community voice. We hire a lot of scientists and technologists that come in with experience. And so sort of our structural bias was to hire the experience, but the experience was coming from places that weren't necessarily community advocates or community groups. And so I started looking for and encouraging hiring folks coming in that had been doing a lot of work within their communities. And so they bring in that lens to our teams. I also recognize that some of the capabilities that we need, we tend to hire. Some of our structural bias, again, is we want 5, 6, 10 years of experience. And often to bring in that skill set, we have to put together where we can bring in folks right out of school who may not have the experience, but they certainly have the capabilities. And then how do we ramp them up to get them that experience? We don't have the luxury of hiring that experience from the marketplace anymore, because I alluded to sort of that skill shortage that's out there. So we've got to start to put in those training programs, those efforts, to where when folks are coming out of school, they can start to get the experience on the job with us. So,
thanks, Jameson. Great comments from everybody. And Tara, I know you have to drop off for another obligation. So definitely thank you very much for joining the panel today.
No, thanks for having me.
Yeah, absolutely. And so we've got about 10 minutes left. I'd like to do a quick polling question just to make sure we stay on track there. And Amy, if you want to run through that real quickly.
All right. The third polling question is, what aspect of ESG do you believe will be the most important to your company's long-term success? A, environmental, B, social, C, governance, or D, all are equally important? And we'll leave this up here to respond to get your CPE. And then I also want to let the audience know that tomorrow you will be receiving an email with a recording of this panel discussion in case you want to listen to certain parts over again or share it with your team. All right, here are the results.
Okay, so good mix. A lot of folks saying all are equally important. Yeah, definitely across the board. I'd probably agree with D personally. I think they all have their levels of importance, but that's good insight there. We may as well just go ahead and do the fourth polling question now, I think, while we're at it here. And this kind of aligns with the next question I want to ask, because I did want to touch on reporting a little bit, since it is a hot topic right now, and where do you start? So interested in how many folks here in the audience are actually putting out an ESG report?
And it looks like we have over half that have responded so far.
Okay. I think ESG reporting can be, in a lot of different forms, whether it's, standalone report, part of an integrated report. There are a lot of things that fall in the category of ESG reporting. So interesting to see. So yeah, about 2/3 say no. So, I mean, that leads me into the question here for, Jameson. I wanted to touch on this because I know that Jacobs has been reporting for a long time. You put out an integrated report in 2020, I believe, and, you've reported using some of the SASB framework and TCFD, frameworks. Can you share a little bit about how you determine what to start reporting on, and how you went about doing that for the first time? I know it's probably been years, but interested to hear that, how that process goes for companies who are just looking to start.
It's been an evolution from different inputs of CDP and GRI and SASB and IIRC, if I get that one right. And we pretty much have settled now on sort of integrated reporting, as you mentioned, which brings together our financial reporting and our sustainability and resilience, or our ESG reporting. We also put out ESG metrics that we know our stakeholders are interested in as sort of a quick sort of performance sort of metrics. And then it's touched upon in our investor reports. So every quarterly there's a touch on where we are on our performance when it comes to ESG and project examples and the like. So yeah, we're tracking really closely. I like the Value Reporting Foundation that's out there. If you haven't been tracking what they have working on, they're really working with a lot of the players in the space to kind of move towards more of that standardized space. I think it's when it comes to reporting, understand where you are on your journey. So different firms are at different places. Are you more regulatory compliance currently? Are you starting to get into more risk management, resource productivity? Those items then lend to stories that you can tell around that corporate social responsibility. And then you can get into sort of leaders and innovators that are really sort of challenging the business models. Each company is kind of at a different spot on that journey. And your reporting should reflect that, reflect where you are on the journey, and where you're making progress as you move along that journey. I would say it's easy to get out there and worry more about the optics and sort of get beyond your journey and what you report. And what's really important is the outcomes. Make sure that wherever you're on that journey, whatever your ESG priorities are that are material or substantive to your business, that you truly have the management systems in place to address those. And then the optics will take care of themselves. The reporting frameworks will take care of themselves, but don't get out in front of that. So, and then where I think things have been changing just in the last 3 months is a lot of discussions around lagging indicators, leading indicators, and then even forecasts, because a lot of companies are setting these long-term commitments, around decarbonization or science-based targets, et cetera, which then you have to not only where have you been, how are you performing, and then also how are you progressing towards plan. Those are sort of different reporting styles, and I don't think most of that is really shaken out yet. So.
Great. Thanks, Jameson. Yeah, I think this is probably a topic we could spend a whole session on realistically, but I did want to touch on it briefly. And I think the important thing to remember is that, there are a lot of frameworks out there right now. There's no one universally accepted framework, but there are a lot of resources out there. And the important thing is just looking at, what do your stakeholders really care about, right? And those are the things you should focus on. There's no one prescribed, methodology for reporting on ESG, but it's really just what's important to the longevity of your company and what are your stakeholders interested in seeing. I know we've only got a few minutes here, and we do have a couple questions from the audience I'd like to cover. We have one question for Morgan. How do you go about wading through the various metrics, to identify a company's ESG ranking objectively? Also, at what level are these companies evaluated at? I.e., are you looking at supply chain as well, or more just company-specific factors outside of the supply chain?
Yeah, both great question. In terms of wading through metrics, I would look more to guys like Justin and their assurance services over sustainable metrics and whatnot. I mean, we have a lot of companies that do self-report, and we do tend to trust the companies we work with. But having that good housekeeping stamp of approval from a firm like Moss Adams only helps bolster the metrics that we're looking to. In terms of rankings, that's kind of probably more in the public company realm. There's companies like Sustainalytics, MSCI, Refinitiv. I think even FactSet puts out some information on ESG rankings for companies. And then, the supply chain does matter. I'll give you one example. The palm oil space, for example, we had a client that is a distributor of palm oil, and that space can be fraught because for those of you that aren't aware, it's often palm tree plantations that are tearing down rainforests and the like. And so in this one distributor's case, we had to ensure, and then there's a third party like industry regulatory agency that kind of oversees that to make sure that the palm oil that they were just distributing, they weren't running any plantations or anything, but to make sure that the palm oil that they were distributing was not sourced from any deforested areas, for example. So, there's very specific or very industry specific kind of niches around that where we might look really deep into the supply chain, but it absolutely does matter.
Great, thanks, Morgan. And I think that we're just about out of time. We have about 1 minute left, so I don't know if anybody wants to make any last comments here before we wrap up. Jameson, Erick. I think I want to say just personally, it's been a pleasure to chat with you all today. Like I said, a lot of good perspectives, different perspectives. So thank you very much for joining us today. Really appreciate it. And thanks to the audience for joining us today. Hopefully you learned a few things and are looking at your programs going forward.
All right, and I want to give a few closing remarks. I just want to thank the audience for being engaged and submitting your questions to help guide today's conversation. And if we didn't have time to get to yours, we will do our best to follow up with you after the webcast. And then also in regards to CPE, your certificate is available to download now in the CPE progress window. And I will keep the console open for a few minutes to give you time to download. Otherwise, it will be emailed out within 3 weeks if you have difficulty downloading it now. And then also, finally, here is a link to an online survey for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. And thank you all for joining our webcast. We hope you'll join us again for our next session of the Building Opportunity Conference, which is actually tomorrow, October 20th. Take care. Thank you.
All right. Thanks, everyone.
Thank you. Thank you, Justin.